Yeah, hello guys. So welcome back to WoW Revision. What we are going to do in this session may blow your mind, guys. How you learn law matters. Studying it continuously like how it is there in the book, then you will just have to keep studying it and it will be difficult to revise and recollect, which is important for exams. What I have done, for the first time I'm going to teach you the full section debentures, section 71. And also in deposits, intentionally few areas I did not teach you earlier, and what I have just simply done, we are doing a comparative study because many provisions in debentures and deposits are common, and I have created 9 points of comparison between these two for debentures and deposits. And then lastly I will tell what are the other general points for debentures. Just 4 points I will explain, and deposits we have already explained the other points in deposits chapter apart from this video in the respective deposits chapter. But full debentures we will be covering here. If you have not studied debentures for any of the exams, section 71 fully we will cover, and we will do comparative learning with deposit. Is that clear, guys, for all of you? Okay, when you learn law like this only, it becomes easier to recollect in exam. So I will show you how we are doing it. For that, first I have to give some basic terms for you. Okay, we have debenture holders and we have deposit holders. This side we have the company. Let's say, for example, the company is Adani, guys. Why I am taking Adani? Because Adani has issued deposits, Adani has issued debentures. Okay. Now, these people are the public who are investing their savings with Adani for higher return. I am not saying Adani is not going to pay and all, but these, what to say, debenture holders and deposit holders have a lot of concerns on a daily basis. May have, for me, interest didn't come. If somebody buys book, today one student called, sir, I purchased the book has not yet come. I asked, when you purchased? 2 days back. Wait pandra, 5 days. Then he said, tracking link is yet to come. I said, did you message the WhatsApp number? He said he messaged. What time? I asked him. At 10 a.m. he messaged. The time of the call was 10:23 a.m. 13 minutes he couldn't wait. So, like that only debenture holders and deposit holders will be. If interest gets late by 1-2 days, they will get, what to say, stressed out, and they will go to the company with petrol. To avoid that petrol scenario and diesel scenario, okay, and at the same time, company also, if company is doing some scam, taking the money and running away, I'm not saying Adani is doing scam, guys, but if they're going to do that, we need somebody in middle whom both the parties can trust. So, the debenture holders and deposit holders will reach out to this DT, and this DT also will reach out to the company and have an eye on the company. A company is doing all the work correctly. Is company doing things correctly, or they're doing some scam? So this is like a middleman who will balance the coin on both sides and ensure both of them are happy. He's not taking anyone's side. He's an independent person. For him, both of them should be benefited. Both of them should not cheat each other. Are you following, guys? Clear? This person is called, if it is debenture chapter, he's called a debenture trustee. If it is deposit chapter, he is called a deposit trustee. Why is called trustee? Because we create an agreement of trust with 3 people and we are all trusting him. Okay, what is this trust agreement? Always trust will have 3 people. So the author of the trust here is going to be company. Company will create the trust for the benefit of the debenture holders or deposit holders. So company is the author of the trust, the one creating the trust. For whom it is created, they are called beneficiary, and whom I am trusting, this person is called trustee. Are you following, guys? I hope you all know what is a trust, guys. We will anyway see this in incorporation chapter. What is a trust or foundation, you would have seen. Are you following? So now there is a trust, a triangular agreement between 3 people, company, beneficiary, and debenture or deposit trustee. Is that clear, guys? Are you all understanding? So what does deposit trustee do? Protect the interest on both the sides. If there is any conflict here or there, he will be the mediator. Okay. For example, let's say we take Pratik is the deposit trustee or debenture trustee. Can he go to office and simply sleep? No. His office location will be in the company only. Okay. His work is to hear to what others are talking. Yes. he should be prudent, guys. In the company, what directors are talking, without asking them, you should find out. Go to the tea break, talk to employees, get some information. Is the money of my people, debenture holders, deposit holders, safe or not? Are you following, guys? We will learn more about this with these points. Now, exam oriented. Debentures is section 71. We are going to see full 71 in this video. Okay, along with the common points of deposit 73 and 76. When you issue, this will come only when you issue deposit to public. Okay, eligible company, it will come. First guys, in both the cases, because it's a debt, you need to create a reserve. You need to create a reserve. In debentures, it's called DRR, debenture redemption reserve. In deposit also, it's called DRR, deposit repayment reserve. That means what I am trying to communicate, you can't write DRR in exam. Examiner will get confused, and if examiner gets confused, you know what's going to happen. Are you all following, guys? Understanding? Clear? So what is DRR? I will explain in the end, guys. Beautiful concept, beautiful concept. In redemption of debentures accounts chapter, this is there for accounting. It was part of CA inter syllabus. Inter itself, they used to struggle in that. Now they removed, ICA removed it from inter. So it's not there for you in inter and accounting, and they have added in foundation syllabus. Thankfully, I am not taking foundation accounts, guys. Otherwise, it will be very hard for them to understand. It's a very complicated topic. I don't know how foundations are going to handle, guys, but all the best. But I will tell you, since it's inter class, end of the video, remind me, I will explain what is DRR for both. It's a beautiful concept, and we may have sums also, so we need to know. Next, for debentures, the standard percentage is 15%. The DRR percentage reserve. When I do the computation, you will understand. But let me finish the 9 differences. Then I will come for explaining what is DRR in the end. For deposit, how much, guys? 20%. Deposit is easy, guys. 1%, 20, game over. But for debentures, I clearly mentioned, read the note. If you don't know any percentage, write 15. But in material, we have another dabba, which I will again explain when I am doing DRR, not now. For certain different cases, it is exempt in a few cases, and there is also percentage for a few cases. Are you following, guys? That alone, when I come to the dabba, I will explain. But standard rate is 15, but there are other cases where it is exempt, where it is 10%. Is that clear, guys? Easy. Whenever listed company, all that comes, the percentage changes. We will go there later. So I will take this DRR explanation in the end of this discussion. Is this clear, guys? Okay. Those who know what is DRR can skip that part. Okay. Next. Here I told we have debenture trustee. Here we have deposit trustee. That's what I explained. Now I told this trust deed should be made. Trust deed agreement should be made. Which one? This triangular agreement between the company, debenture trustee, and debenture holder or deposit holders. When should I make the agreement? Follow carefully, guys. See, if debentures are issued in this point, offer open, offer close, they might tell 7 days time. For example, within that 7 days, you can give application to get allotment for debentures. After allotment, after the close, the debenture trust deed, don't write DTD, guys, I am writing simply, the debenture trust deed should be made within 3 months, correct? That's what I wrote, 3 months here. 3 months from closure of the issue. Are you getting, guys? After the issue is closed, I am giving you 3 months to make it. But in deposit, they are saying that same agreement between those 3 people, that triangle, should be made 7 days before offer opens. Should be made 7 days before offer opens. Now, you will remember 7 days. You will remember 3 months. But in exam, edhukku 7 days? For which 7? For which 3 months? The chances of confusion is high because ICA will make you confused. The case study, they will give you both. And you will get confused. How to remember this? Look at the logic. Small logics I will tell in VAV revision, guys. Logics which take a lot of time only, I am deferring it to regular batch. Okay. So why here for debentures it's 3 months after closure? Look at this. After this date of closure, New debenture holders cannot join the company. Only those who got allotment will be debenture holders. Correct? That means the three parties for debenture holders. Who are the three parties? The three parties, debenture holders, trustee and company, are fixed. So you can make a contract or trust agreement between these three people easily. Correct? But deposit is not like that. If you take deposit, I can make deposit throughout the year. There is no offer open, offer closing. Correct? How you can go to a bank and open FD? Like that I can go to Bajaj Finance and open anytime deposit. Then what is the closing date? There is no closing date. That's why they are saying 7 days before offer opens. And there I will not mention the name of the debenture holders or deposit holders. I will just mention beneficiary for all the deposit holders of the company. Are you following, guys? Getting logic? Now you will not forget. At least you will not make the mistake of for deposit it will come after closing. Are you getting it, guys? It will come before 7 days, 3 months. Are you understanding, guys? Hello? Following? Next, so this deposit trust deed or this trust deed for deposit, it's always mandatory. Because you are getting money from public, it is mandatory. There is no exemption. If you are a company issuing deposits to public, now get this. But in debentures, it is exempt. In a few cases, same thing we have in the book, guys. I will show in the book and go to notes. It's exempt in 3 cases. Exempt now, it's optional, not mandatory. What are the 3 cases? Company issuing prospectus. Now already prospectus has all the details. Lot of validation and authentication goes into it, so no need deed. Company makes an offer or invitation to public, or if the number of members, not debenture holders, is exceeding 500, it is mandatory. So in these cases it is mandatory in solraan. So what are the cases where it's mandatory, guys? If you are issuing prospectus and you are going for a public issue, prospectus na public, second invitation to public, in that case also it is mandatory. So here mandatory, and if it exceeds 500, that means I can write it is not mandatory. In other ways, let me write in an easier way. It is exempt only in one case, if debenture holders are up to 500 in number. Are you following, guys? In simple ways, public issue means mandatory, guys. Even if it's public issue, but the number of debenture holders are 500 or less, no need trust deed. Because for 500 people, company can manage. Only when it goes into thousands and lakhs, I need a middleman to manage both ends. Are you getting it, guys? So for deposit, always it is mandatory. Here, except if it's up to 500. Are you following, guys? Easier. Comparative learning, is it easy, guys? Okay. Next, there are some resolutions to pass, guys. How you have in company shareholders resolution, where you have ordinary special resolution. If you look at the beauty, the similar resolutions are there here also. I'll tell you how the act is drafted, guys. Section 70 is not there in syllabus, correct? 71 is debentures, what we are doing. 72 also is, 70 is there in syllabus, I'm very sorry. 70 is prohibition of buyback, 71 is debentures, 72 is not there, okay. 73 to 76 is what chapter? Deposits. 77 to 87 is charges. That means can I say so beautifully and well planned that everything in 70s relates to what, guys? Debt. Debentures, deposits, charge. Whenever you take a loan, you have to create a charge, secured loan. So 70 series is a debt series. 60 series is an equity series. 61 alteration of capital, 62 rights, 63 bonus, then 65 not there, 66 reduction of share capital, 68 buyback, 60 full equity. Like this, if you remember, you will not forget section number. 60 is you should not take debentures. So 60s is equity, 70s is debenture deposit. Now we are doing debenture deposit, guys. Okay, let me erase this, come back. Sir, why are you talking about this resolution? Like how for bonus issue we have resolutions, here also we have some resolutions. Let me finish off deposits easily, because there is only one limit for you to remember. Only how many limits, guys? if 1/10 in value of deposit holders, if 1/10 in value of deposit holders make a request, you have to call a meeting of deposit holders. Who has to call? Deposit trustee. Are you following? Sir, ayo sir, new percentage 10% I should again remember. Nothing doing. In EGM section 100, to call an EGM, what is the percentage required to call EGM? 10%. 1/10, same. So to call a member of shareholders also, to call a shareholders meeting EGM also 1/10, to call deposit holders meeting also 1/10, and the good news is to call debenture holder meeting also 1/10. Are you following? Comparative learning makes it easy, guys. Do comparison in learning, not in life. Comparative learning will help. Are you getting it, guys? All of you with me? Naresh following? Online fellows keep following. So 1/10, you should make the request to whom? Deposit meeting, na deposit trustee. Debenture means debenture trustee, 1/10 in value. Why will I call meeting? Why do you call EGM? To discuss few issues. Same way you can call meeting for discussing any issue that they have. That's not our issue. Their issue, let them do it. Are you following, guys? Clear? Understanding, guys? Sir, one deposit holder or one debenture holder itself has 12% of value, sir. Can he call? Yes. See, in shares they will tell voting power, paid up share capital they will tell, because there is something called voting. Here nothing like that. Just to 1/10 of the value of face value of total debentures or deposit, enough. Are you following, guys? Clear? Understanding, Roshan? With this, the 1/10 limit is over. You have another limit for 3/4 in value, which is not there in deposit, which is there only for debentures classification. What is this? Who was the debenture trustee in our example? Pratik. What Pratik did after going to office every day? He goes to office at 10:30, 11. By the time he sets up his desk, it will become 12. Then he will open Zomato, Swiggy. He will search for lunch. He will order lunch. Lunch will take 45 minutes to come. In that 45 minutes, he will work quickly. Some work he will reply. Then after lunch comes, he will eat. Then around the building, he goes for a walk, nice walk he goes. Then he comes and goes for a nap. So he will take 2.5 hours lunch break. 2 to 4 o'clock, he used to take a lunch break. Then he will again work for 1 hour. 5 p.m. Okay, let me go. He will go home. Okay. So he thought he can relax and work. All the messages are 100, like how my WhatsApp is always 100. I now am replying once a week, but I'm getting there, guys. Soon I will find someone support reply. So far for me, all the WhatsApp messages only I reply. That's why the delay, but it will get there. So because of this work, what Pratik is doing, the company and the debenture holders were not happy with his performance in work, not other performance. Okay. So if you want to remove him, you have to call for a meeting, and 3/4 in value of the debenture trustees, no, 3/4 in value of debenture holders will pass a resolution to remove Pratik. Are you following, guys? Understanding, all of you? So 3/4 is for removal of debenture trustee. That's it. Who will vote? Debenture holders. Pratik is saying, what are you saying about me, sir? I am a proper serious worker. You do not know about what I work. In Adani group, I even know where Adani sleeps, what time he sleeps, what time he wakes up. Fully I am tracking. Under his table I kept one bug also. Everything I am listening, sir. Every information I am tracking. Where Adani is going to, which house is going also I know. He is saying, everything I know, sir. The debenture holders money is saved as long as Pratik is the debenture trustee and is putting challenge. No. Okay. But after doing so much work also, Adani used all the brains. And example, hypothetical example, guys. Okay. Adani did not pay the whom, guys? Did not pay the debenture holders, did not get the money. 5,000 crores vanished. The 5 went off. Okay, 5,000 crores vanished. Where is Adani? We took the flight somewhere in the world. Where are the debenture holders? Came to the office with petrol. Where is Pratik? Stuck in the office. Now he doesn't know what to do. Okay, immediately all the debenture holders will first go attack whom, guys? Pratik, I am searching for you only. Now Pratik only has to pay the damages, from where he will go for 5,000 crores. So if Pratik, so if at all there is any damages for debenture holders because of non-proper performance of Pratik, debenture trustee is liable. But if Pratik can prove, I did a good job, wait, keep the petrol aside for 5 minutes, look at this AV. Look at this, I am showing you unseen footage, everything I collected. I even went to tribunal, I complained to tribunal also, they didn't take action. I did all the work, believe me guys, I am also on your side. My money also 2 crores is going to go, my friend gave. He's trying to convince, if he can convince the debenture holders, and if 3/4 in value vote, he's exempt from damages. So 3/4, two things, 3/4 is to remove him, 3/4 is also to exempt him from damages. Are you following guys? So look at the responsibility, liability of debenture trustee, same point in book, look at this, where debenture trustee enters into a contract with company to exempt him from damages, contract will be void. Like this, for Pratik's defense, he can enter into a contract saying I will never be liable for damages, sorry, such a contract is void. And but if what I just told, 3/4 of debenture holders agree in value, he will be exempt from damages, and only when he is guilty to show adequate responsibility or care. Are you following? But if he is doing good work, if he finds some information, what he should do first? One, he can either call a meeting of all the debenture holders. He should not send a mail to everybody, your money is gone, then everybody will panic. Okay, he should call them for a meeting and discuss in that meeting. But till then he should be careful first when he calls for the meeting. Or if he doesn't want to call, first he will call for meeting, and if meeting also everything goes over, then if still he has some doubt that company cannot make the payment, he will apply to the tribunal. If tribunal is honest, they will pass the order asking the company not to incur further liability. But if tribunal is not honest, they will also join the flight. But this and all don't write in exam guys. For exam, Pratik, the debenture trustee, if he has a doubt, he can call a meeting of debenture holders by himself, or he can go to tribunal. Tribunal will pass an order that company will not incur further liabilities. Are you following guys? And tribunal will pass an order. Look at this, they will pass an order asking the company to repay the interest and principal. With that his work is done. Sir, for exam what to remember sir? Coming back to percentages, 1/10, in 1/10 deposit holders you can call for a meeting. Same 1/10 debenture holders can call for a meeting. 3/4, in 3/4 Pratik can be removed or Pratik can be exempt from damages. Who is Pratik here? Trustee, debenture trustee. Not of this concept is not applicable in deposit. Are you following guys? Company can create something like this. Act it's not there. Companies Act syllabus not there, leave it. That's it. Are you following guys? Clear? So we are done with 7 common points guys. Easy, huh? Easy guys, learning this way. Okay. 1/10, 3/4, then 15-20%, 3 months, 7 days. That's it. Next, casual vacancy. Auditors chapter you saw casual vacancy, huh? Correct? Same concept of casual vacancy here. In deposits chapter, we don't have anything per se exactly saying about casual vacancy. So basically, board of directors can fill the vacancy, but in debentures, just like what you have in auditors, if casual vacancy is for any reason, who will fill? Board will fill. See, it could be anything. Whatever it is, board will fill. But if it is because of resignation, why resignation alone? In auditors chapter also there is a different provision. In debentures also there is a different provision. If you resign, there is most likely there is a dispute between you and the company, or you are being threatened, you are being blackmailed. See, I can resign even for health reasons, but the more probability is there is something going wrong. So if there is resignation, we won't allow the board to fill the vacancy. Otherwise, what board will do? Slap the auditor, resign. Slap the debenture trustee, resign. Take the gun, he'll get scared and resign. And then I will appoint somebody else. Now board gets supreme power. I want to include the members also. So if there is resignation here, who will fill guys? Majority of the members. Who is majority of the members? Majority of the debenture holders in number, guys, not value here, not value. It is not 50% of value, no. Majority of debenture holders in number, quantity. Are you getting it, guys? If there are 100 debenture holders, majority more than 50. Are you getting it? That's what is given here. Look at this. It can be, such vacancy can be filled by majority, written consent of majority of the debenture holders. They don't use the word value here. Are you understanding, guys? Clear? Understood? So let me revise all the, if I revise all the limits at once in both sides. Here we have only, this side we have only one thing, 1/10. This side you have three things, 1/10, 3/4, majority in number. What is for each? This 1/10 is for meeting, common in both, rest are not there here. 3/4 is for what? Exempt from damages or to remove debenture trustee. Majority is what? To fill casual vacancy in case of resignation. That's it. Debentures limits for debenture trustee and deposit. Are you following, guys? Can I have multiple debenture trustees? Yes. How you can have multiple auditors? Joint audit, SA 299, we allow multiple auditors. Like that here, you can have multiple debenture trustee. For each debenture trustee, what I told now, provision will apply. So if there are 5 debenture trustee, 2 of them left resignation, remaining 3 can continue. Are you following, guys? Clear? Let's come back. We are towards the end of the comparison over here, guys. Follow. Who cannot be debenture trustee? Only 2 points are, sir. No, there are many points. I am only rating the points of difference over here. Sir, what are you trying to say? This debenture trustee cannot be a few people because independence is affected. Imagine, follow here. Imagine Pratik, our friend Pratik. He is the debenture trustee and he itself is the debenture holder also. What will happen? If something goes wrong, first he will try to get his money and close his account, then only he will inform others. Or if debenture trustee is a bank that gave loan to company, if something goes wrong, that bank will first try to save their loan, then go to others' money. Are you following, guys? So for just purely for independence purpose, independence, okay, integrity, honesty, independence, it should be a third person who has no relationship with the company in any form. You should not have any debt with the company. You should not have any equity with the company. You should not be an employee in the company in the top management, or you should not be their relative. Are you following? For that they are trying to cover 6 points, all debt and equity. The advantages, this is in debentures chapter in our book, guys. This is in debentures chapter. The same points, if I run through and go to deposits chapter, in the common points, who cannot be deposit trustee, same thing will repeat. But there are some differences. There are what, guys? Some differences. What are those differences? Only 2 points of difference. That means if you learn one set of points, 2 things are covered. Who can't be deposit holder, deposit trustee, who can't be debenture trustee. Points are same. Learn once. Differences, there is one 2 percentage point and one relative point which is not there in 2 places. It is there with debentures. These 2 points are not there in deposit. So what are the points? Look at this here. So let me explain the points. I'll take debentures because debenture is the bigger list. In debenture everything is covered. Are you following, guys? In this, if I eliminate 2 points, this relative and this 2% or more point, if I remove, it becomes deposit trustee points. Are you guys following? Rest of the points are fairly simple. It's there in our book, guys. Book is anyway freely available for everybody, soft copy. Okay. So beneficially holds shares na shareholder. Are you following, guys? Beneficial shareholder, promoter, director, KMP or any other officer or employee of the company holding subsidiary or associate. It's a big, easy, self-explanatory points. Because we are in VAV revision, I am not drawing the diagram, guys. Otherwise, we can create one diagram. So first is shareholder. Second is basically your part of the company's top management, promoter, director, KMP, or employee or officer of the company, or holding or associate. Third is relative of the promoter, director, or KMP. Only relative of promoter, director, KMP, not of employee. Then indebted to the company or its holding, subsidiary, or associate. If I have to draw this, see, if this is the company, company is holding, subsidiary, associate, and holding, subsidiary, and associate. For this entire group, you cannot be an employee, you can also not be indebted. Are you following, guys? You should not be indebted. What is this 2% point? You have a pecuniary relationship with the company amounting to 2% or more of its gross turnover or total income, or 50 lakhs during the immediately 2 preceding years. Let me give an example. Relative, huh? Where is the but 2% is not there, correct? I'll explain that. Okay, so what is this 2% point? Very simple. See, imagine I am Deloitte. Okay, for all the thousands of Deloitte employees in the whole world, not just India, thousands of employees, I am getting HP laptop. So I will do a bulk order with HP. Okay, I am Deloitte, I am doing a bulk order with HP. Now, do you think the order of HP laptops will cross 50 lakhs? Yes, for all of Deloitte employees, HP is giving laptop. It is whichever is less. That means even if other amount is more, it will definitely cross 50 lakhs in my example. Then Deloitte cannot be debenture trustee for HP if there is a need. If HP is giving debentures. Are you following, guys? But what is the whole percentage they are applying here? The percentage is 2% or more of its gross turnover. So first you write down gross turnover, X. Second you write total income, Y, or 50 lakhs, whichever is less. So it will be X into 2%, compare with Y into 2% or 50 lakhs, whichever is less. Question will give you what is turnover, copy paste. Question will give what is total income, copy paste. Here income, I'm talking about net income, net profit. Are you following, guys? Are you understanding? Clear? Question will give those details. A question like this has not come, and we should take during the immediately preceding last 2 years. I will take the last 2 years or the current financial year. So whichever is less, immediately preceding 2 years or the current financial year. That means I have to compare this for 3 years, current year and last 2 years. So to explain to you in better way, what I should do, if my current year is 25-26, my previous 2 years is going to be 24, 25, 23, 24. For this year and this year, I have to compare that 50 lakhs, 50 lakhs, 50 lakhs, X, 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 Y, 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 turnover, total income, take whichever is less, and my transactions, look at this, pecuniary relationship, any kind of transaction. My transaction should not exceed the lower amount. You have to compare it 3 times. Are you getting it? Are you all following, guys? Why? Because if you have business worth 50 lakhs or more, I'm taking the lower amount, assuming this is the lower amount, 50 lakhs or more, that means you are having so much transactions with them, it affects your independence. Are you all getting it, guys? This 2% point is not there in deposits, but that same point is there. Instead of 2%, they gave a different wording in deposits. If you take the book, for deposits, what they have told, they use a word called material pecuniary relationship. That means what they are saying, are they 2% now? Instead of defining in quantity, they are saying anything which is material. What is material? Subjective based. The auditor will decide what is material, or the case, the company will decide. Are you following, guys? Clear? I don't. Oh, yeah, I think party related to A to D above. So the difference is Here the related party in deposit is for all A to D, but over there they are only mentioning, if I am right, so that's why relative, here they are mentioning only relative of director, promoter, K. That's why I said relative point is little different, rest are all same. Are you getting it, guys? Understanding, following? Okay. Again, should you mug up all these points? No, guys. The institute is moving away from testing mugging up questions. If you notice in new syllabus, you just have to be aware of these points. Any one point will be applied as an application based case study. In fact, the future of CA exams, maybe after 10 years, you don't even have to write. It will be 100 marks MCQ. 100 marks MCQ with system, or with books also they will allow. To test that only the open book exam is there in CA final. In fact, in other countries, all the other exams, all the global courses, everything is MCQ, correct? I think CFA is fully MCQ. CFA MCQ. Sorry? Somewhat, but I would say majority is MCQ. 70 to 80% of the global courses are MCQ. CPA Australia, I know that, okay. In that it's majority MCQ, little bit writing will be there. You don't have to write, you have to type. Little bit will be there. Only our exams is like this, it will go there, guys. It will take another 10 years. By then you will finish CA. Okay, it's for juniors. Okay, are you following, guys? Clear? So concept based learning, just be aware of this. Of course, regular batch now I will explain this. Maybe another 20 more minutes just for this. That's what the difference. WoW revision 25 hours to regular 90 hours. Are you getting it, guys? Are you actually following this? Any doubts? If you read, you will understand. Last one, he has given any guarantee. Same guarantee is over there. Following up, Pratika, are you surely understanding who cannot be debenture trustee or deposit trustee? Important. They can ask in MCQ. So I've given the difference. That's what we have over here. Is that done, guys? So the two little difference point is the relative point. Here relative only for few people. Here relative is for everybody. And that 2% point. Here 2% of gross turnover or total income of 50 lakhs, whichever is less. Other side, material, pecuniary relationship. Are you following, guys, all of you? Clear? So 9 points of difference are done. We just have quick 2 discussion points. One is what is DRR and other general points. Deposits, other general points in the chapter. Other procedures we have discussed in detail in deposits chapter itself, in video also in the app. You will see this. In this video will be in deposits chapter only, guys. Okay. Debentures, we have another 4 points which is there in the book. In the starting first page we have some 4 points. This only I have summarized into 4 key points over here. Simple. What is the duration of debentures issue? It is for 10 years. After 10 years you have to repay. But in certain cases you can have extra 10 years. That means overall becomes 20 years if you are a company in the infrastructure industry or any other notified companies. That only is there in the book here also. Not exceeding 10. But if you are in the infrastructure industry or what permitted by central government or national housing bank, they will allow up to 30 years, guys. Sorry, they are allowing up to 30 years. I will tell the logic as to why it is 30. That means extra is 20 years. Why it is 30, I will tell you. Look at this. Again, there's another beautiful comparison. For preference shares, duration is how many years for redemption? 20 years. For debentures, the redemption is 10 years. But for both, if it is an infrastructure or other notified companies, preference we add 10 years, so it becomes, here you are adding, so it becomes 30. Why 30? Metro, see, I need to give returns. I am collecting money to do a project to repay. But infrastructure, for the project to get over itself, metro will take 10-15 years. Then how I will get money to repay? Again after 10 years I won't have money. That's why they're allowing up to 30 years. Are you following, guys? All of you with me? Okay. So other general points, first, duration is 10 years for debentures, but plus can go up to 20. So maximum 30 for infrastructure, housing finance bank, etc. Clear? Next, if company is going to issue convertible debentures. What is convertible debentures? Entry will be debenture account debit to equity share capital. You have to pass special resolution. Can you tell me why SR? Only for convertible debentures, others it's not mandatory. Perfect, because in future this fellow debenture is going to become shareholder, so I am going to get voting power. I will come and sit next to you in the AGM, so I will get your permission before itself, not at the time of conversion, at the time of issue itself. So when you are issuing convertible debentures, what you have to pass, guys? SR. Logic purida? Getting the logic? Why, guys? Next 2 points are related points. When you are issuing debentures, if they are secured debentures, look at this, the types of debentures that we have as per our material is secured and unsecured. Do you know the difference? I don't want to go to class 11 and teach you guys. Convertible, non-convertible, class 11 you studied. Redeemable, irredeemable is there as classification, but this concept is not practically allowed because maximum is 30 years. If you are issuing secured debentures, can you guess the point? You have to create a charge. That charge only they are saying you have to create a charge on the assets. You can either use the assets of the company or the company's holding subsidiary associate. So you can create charge on the company or the company's group, close group of holding subsidiary associate. Is this clear, guys? All of you with me, Roshan, understanding? Easier. And lastly they are saying, this point also is there in the book here only, guys. Look at this, creating a charge on company holding associate subsidiary. Are you following, guys, on their assets? And last one point, if for a government company, issued by a government company, no need to create charge if government gives guarantee that we will repay. Government guarantee is a very strong guarantee. So if government is giving guarantee, no need to create what? No need charge, not for all companies. Government will first of all give guarantee only for a government company. So if BSNL, LIC is going for debenture issue, no need to create charge. Government will give guarantee. Government tells na promise it will always happen, guys. Are you following? Clear? Na edu solla provision solra. So government guarantee na no need to create charge. They are the ones who made the rule. Clear, guys? These are the other unique provisions in debentures. Clear? Yes. Optional. Only if government is giving guarantee, optionally no need to create charge. But already when they give guarantee, do you think government company will create charge? No. Okay. So these are the 10 points. Have you understood, guys? Fully for exam. Same thing is there in the book. Right from here, debenture chapter starts here. It keeps going. Whatever is there here, fully I have explained, guys. And then deposits will start. Deposits we already finished. What I covered now in deposits is the common point 1, 2, 3. Are you following, guys? And 4. Getting it? Now what is pending? Done now. DRR is pending. The logic of DRR. See, logic of DRR may not be tested in exam, but we never know. In one exam in old syllabus, they asked the accounting for DRR. And even because it is in CA foundation, they may ask. So I am not going to go fully in detail, but at least let me tell you what is DRR. Okay, what is DRR? Look at this. See, this is the P&L. Assume net profit is 100. And they are saying create DRR of 20. I am taking deposits to explain this. Because in deposits, percentage is flat, 20. I have to create 20% DRR for deposits. So I will reduce for DRR and create how much, guys? 20. So when I go to my balance sheet, I will have DRR reserve as part of my reserves and surplus 20. Are you following, guys? So what will happen? A part of the profits is apportioned separately in reserves, which cannot be used for anything else. So what is the entry for this? P&L account debit to, this is entry 1. The foundation accounts, no. Okay. It's part of foundation syllabus. Second, I will pass one more entry. Liability side, I have kept the money aside. But what about the assets? Otherwise, what will happen? DRR will be there. What if I make all the assets 0? So I have to pass a corresponding DRR. This is 2020. DRR investment account debit 20 to cash or bank. So what will happen? My cash in balance sheet will reduce by 20 and I will create something called DRR investment 20. That is nothing but investment in a scheduled bank FD. Or they give some list of places where you can invest. It's there in the book. You can invest in some registered trust, all of that. So now you can see reserve is matching with asset. And this will be, what will happen for this guys? At that after 10 years for debentures, after 3 years for deposits, when I have to repay, I will sell this investment. That time the entry will be bank to investment, DRR investment. Whatever profit loss comes will be adjusted in this DRR reserve and I will repay my deposit holders. This reserve, if there is any balance pending, will be transferred back to your general reserve. Are you following, guys? So in that way, what is happening? Every year you are creating 20% reserve. So that 100% is not saved for repayment. At least every year 20 you accumulate, now on extent you will be able to save. It's like a safety measure, like emergency fund. At least some money you keep. How does the numbers here work? Read the provision, guys. Are you all understanding? See, I am not teaching you redemption of debentures here, DRR. That's a huge concept. With this example, you understood briefly. Reserve side, I am accumulating reserves. Asset side, I am creating investment. Both are matching. This will be used at the time of repayment. Are you following, guys? Hello, everybody. Okay. Now, 73 and 76, recording students, when I tell everybody, hello, are you understanding? You should repeat at your end. Yes, sir, I am understanding all of that. Okay. Now, look at the provision over here, which says, company has to create DRR and transfer at least 20% of the deposits maturing during the following financial year to a separate bank account, what we just did, before 30th April of each financial year. So let me prepare the timeline. I'll just take some rough numbers, guys. Year 1, year 2, year 3, year 4. Here they are saying before 30th April of that year. This is previous year, 31st March 25 nuchkonga. 30th April 25. Are you following, guys? Before this 30th April, what they are saying, read the wordings. You have to transfer at least 20% of deposits matured during the following financial year. So I will check what is the deposit maturing in next year. We can compute because time will get over. So let's say deposit maturing next year is 100 crores or lakhs, whatever. So before 30th April, next year is 25, 26. I am now in, sorry, this is 25, 26, next is 26, 27, 27, 28, 28, 29. Are you following, guys? So before this maturity happens for 100, I will transfer 20% of that 100. How much, guys? 20. I will create what? DRR. Let's assume this is the first year. Let's assume this is the first year of business, and this year only I issued deposits. So deposits can be issued up to 3 years, but I can also issue for 12 months. So 12 months is 100. Are you following, guys? Now let me go to year 2. Let me go to year 2. Next year, which is 26 and 27. What is the balance already available in DRR? 20 is my closing balance because I created last year. And I should also see now what is maturing next year. Correct? I would have issued more deposits. I would have issued more deposits. So let's say what is maturing next year is 200. So what should be my DRR balance? 20% of 200, guys. This is the 20% of 200. So 200 into 20% is how much? 40. I need to have a balance of, but I have only, so I will create a reserve for another 20 and my total DRR will now become 40. Like this I will do for every year. What is maturing next year? create 20%, is that balance available this year? That's what. Next, the point doesn't end over there. It also says, usually I explain both together and they get confused. So I finished the first point. Now there is an and condition. One more and condition. The balance in DRR should not fall below 20% of deposits matured during the financial year. Let me explain this with second year and first year. Okay, what I did so far is only the first point. Now if you see, in year 1, is there any deposits maturing that year? No. So that year I will not check that point. Let me go to year 2. Is there any deposits maturing in year 2? Yes. How much? What is 20% of 100? Already 20 balance is there. Good to go. So this is like a double checking that what you created in year 1, is it still there in year 2? Now let me go. So this year 2 I have how much? 20. Let me go to year 3. Let me go to year 3 and apply this condition. What is the deposits maturing in year 3? What is 20% of 200? Already you have how much? 40. It's fine. Now look at year 4. Let's say in year 4, only 50 is maturing. Only 50 is maturing. So 50 into 20% is how much? 10 irunda podum. But I already have in the 4th year how much, guys? 40 is already there. It is sufficient. 40 is already there. It is sufficient. 40 is already here. I'm in year 3. 40 is already there because I need only 50 into 20, which is 10, but 40 is already there, guys, not this 40. See, I'm in year 3 now. Let me again do it for you guys. I am now in year 3. I have to check double condition. I have to check 20% of next year and 20% of current year. What is 20% of next year? 20% of 50 is, I need to have 10, but I already have 40. What is 20% of current year? 20% of 200 is 20 into 200 is 20, sorry, 200 into 20% is how much? 40 is already there. That means by having 40, I have satisfied both the conditions of having how much? 20% of next year and 20% of this year. Are you following, guys? Like this every year I will check. For deposit it is 20%. For here 20%, then this only is there in foundation. Redemption of debentures, they have to do sums and prepare ledger of DRR reserve, DRR investment, all of that gone. Okay. What we will do with the reserve is equivalent to the asset. The minute you repay debentures or deposit, reserve will be transferred to general reserve. Okay. Now in last point, in debentures, what is the percentage? 15%, but there is a catch. There is a catch, guys. You have to make a small change in your book also. Okay. Check in the study mat also once for me if you have study mat. Here I changed it, but print did not go through. This is not 15%. This is also exempted. Check in the study mat. If not the book you have, ICA study mat, quickly check it if you have it with you, guys. Make that change. It is in page number 81. Okay, small change. Requirement of DRR, one table will be there. This dabba is nothing. I didn't make the dabba, guys. Nobody makes the dabba. I copied from ICA study mat. ICA study mat copied from Bar Act. That's all. Okay. Page numbers 81. Just make it exempt. Just cross check quickly in study mat. As far as I know, they are exempt only. Exempt only. Correct? You remember exempt now. Naresh remembers by heart. Study mat patham apdi mulingitaam. Okay. Exempt only, guys. If Naresh confirms na, it's confirmed. Okay. Fine. Harini will keep cross checking in the meanwhile. Fine. Now let me explain this table and then close this in 2 minutes. Look at this. For all cases, it is how much in here? 15%. Same provision. And I told you we should invest this money. Where we should invest? I told you schedule bank. I told her. If you want, you can also invest in government securities like treasury bond, all of that, and any other securities which is there in the Indian Trust Act. So schedule bank, government trust securities, and unencumbered government. Unencumbered, na, there is no encumbrance for that. Simple. Lastly, I have nothing to teach in this dabba, guys. You just have to see the percentages. What I will tell is, if you see terms like All India Financial Institution, banking company, listed company, in the my terms, if you see now, exempt, why exempt? For banking company, bank will take care. All India Financial Institution, RBI is regulating. For listed company, SEBI is saying, na pathukkuren, Companies Act, you be silent. So because other acts are taking care, Companies Act is silent. NBFC not registered, you have to create DRR. Create DRR on a 15% default rate. And for unlisted companies, other than mentioned above, unlisted companies alone, they are giving a small relaxation and going with 10%. Are you following, guys? That's it that you have to go through, guys. So for the following companies, yeah, it is basically this classification ABC only I have given over here, guys. Percentage. Once you know the percentage, you will apply like this. If it is unlisted, 15 will become 10. If it's listed, exempted. That's it. Are you following, guys? With this, that dabba you please go through, guys. Clear? Nothing great to understand. You just have to go through these terms where they can test this MCQ. So again I will tell you, All India Financial, RBI, Banking, RBI, listed company, SEBI, NBFC not registered, na usual 15, other unlisted companies you take 10%. Are you following, guys? Clear? Understood? So with this we are done with debentures also in detail, and also we are done with deposits chapter also in our VAW revision batch, guys. Have you all understood the concept? Idea of this is to understand the concept. Okay, clear? What we are not doing, again I'm repeating, in this 25-30 hours of VAW revision, I'm keeping it exam oriented. What we are not doing is making you repeat multiple times. You will go home and read that. Understanding? Any doubts before I sign off now? Clear? That's it. Thank you, guys. Yeah.